Okay, hi everybody. My name is Mike Butcher. I was formerly with TechCrunch for 3,000 years, and now I'm running heartfounders.com. So please subscribe, and we'll see you online. And I was thinking as I was walking over here that the AI stage and the venture stage should be merged, because that's all investors invest in these days.
Yeah.
So I'm not sure there's any much point in having two separate stages, but we're going to have a great discussion here, because we're going to have a mix of the US and European conversation in venture. And this was titled An Investor's Field Guide to Funding in 2026. But really, we're just going to talk about anything we want regarding this subject. It's my pleasure to be joined by Zach Coelius, who's founder of Coelius Capital, Zoe Perret, partner of Initialized Capital Management, and Enrico Mellis, partner Lakestar. Round of applause, everybody, for them. Now, in no particular order, Zoe, I see that you invest in AI, energy, and climate. Isn't climate a little bit off the menu these days?
Yeah, we don't say that anymore. No.
We can't say. What do we say now? Resilience or something?
Resilience. There we go.
Right. But it's a serious subject. I mean, we obviously know the predilections of the current U.S. administration in terms of his thoughts about the word climate. But is it being reinvented and restamped?
I think it's less so that. I think we've been really excited about what we're seeing outside of just software. And there's a whole new kind of category of companies in robotics and defense and energy. And what does it really mean to be climate at this point? I think it's, taking what we're seeing on the AI side, and we need an entire new abundance of energy to power that. And so that is climate in many ways today.
Yeah. So in a way, climate's been rebranded as energy, isn't it? In some ways, isn't it? Speaking of themes, we'll just drill down the themes aspect. Zach, I know that you invested in Near Health not very long ago, which is a health tech startup in proactive care in Canada on the seed round. Does that mean that you would brand yourself in that way, or are you still a generalist?
I mean, I'm too lazy to brand myself. That requires far too much effort. Honestly, what I do is I wander around the world. Mike and I were just in Kyiv together last week, wandering around the world together. And so you know well what that's like. And I just try to find awesome founders who are doing new, interesting, beautiful things. So whatever that is, I'd try to join the ride.
So on the founder subject, do you think that the rise of generative AI means that we're looking for a different type of founder, that we're back to like highly technical founders now versus, more business school founders from back in the day, or what's going on, Henrik?
Yeah, so, I'm based in Berlin, and most of you maybe still have the echo of what Rocket Internet was in the back of your head. Basically, guys from McKinsey starting a copycat of a business.
They did many copycats, Airbnb, eBay copycats, you name it.
Whatever made more than $10.50 of revenue, we copied back in the day. I started my tech career in a portfolio company of that, and the profile then was you needed the ex-McKinsey business guy, and then there's also some CTO that people didn't care about so much. Nowadays, what we see is very different. We see people tackling harder markets. We just spoke backstage about resilience or defense, no matter what you want to call it. These are very, very different markets. They're very hard to crack. If you're coming from outside of defense, it's gonna look a lot more obscure to you, and hence we now look probably for founder market fit much more than back in the day.
Would you agree?
I agree. And I think in terms of what's difficult still, I think teams need to hire and recruit highly technical researchers. And those are oftentimes some of the more difficult hires. And so if you don't have a founding team that is respected by kind of world-class AI researchers, it's going to be very difficult to get very far on the technical end.
How much of funding is going into talent now as a versus product?
No, I think a significant portion, especially for software businesses. Yeah.
Yeah, and we're familiar with the $1 billion offer that Meta gave to one engineer. But what is that playing out still in early stage, Zach?
I mean, you have to remember that startups contain a multitude. And so we went from a world, not too many years ago where everyone was focused on SaaS, B2B software, and that became the pattern that everyone sort of was fixated on. And now we've gone back to a more traditional sort of venture landscape where you have who are hotter than not in some days and is shifting back and forth and it's much more fluid. And so in certain categories, technical chops is everything. But on the other hand, there's a bunch of opportunities to use those new technologies to go after new markets. So I just invested in a new AI dating company. I've invested in AI for basically interviewing and recruiting. These are very, very standard, simple problems, but with new technology that you can really crack them in new ways and build new paradigms and modalities for the users. So every type of founder has a real opportunity right now to go after it.
Is Enrico and Zoe, would you concur that what we're seeing really is a wave of startups which are sort of replacing existing companies just as AI native? So they're going for what was a category play back in the day with B2B SaaS, but now it's AI native and they're attempting to supplant the earlier startup.
So I think one of the big questions that many VCs are kind of and mostly are still wrestling with now, not just 2 years ago when the whole whirlwind started, is how much of a X, but with AI, is really, can really succeed. I think AI is a technology that incumbents have a much easier time milking than new challenges. So usually we look for businesses that can, tackle an existing market, but with an angle that maybe an incumbent isn't even able to serve because it would cannibalize their own business model, or you tap into data pools that at least the large language model players can't tap into, and maybe you compete with a slightly slower moving SAP, but you don't compete with OpenAI or you don't compete with Meta.
Right.
I mean, the reality is that the companies that are AI native just can move faster. And so even in our existing portfolio, some of the 2, 3, 4-year-old companies, if they haven't reoriented to that mindset, it's very difficult to catch up. But I think kind of to your earlier point, distribution is still incredibly important. And so being able to get into and sell into an enterprise and then kind of seep through that enterprise into different workflows is an advantage in and of itself.
Totally. But also, we were talking about AI native, etc. And the hot startup at the moment on everyone's lips is Lovable, and they constantly talk about their ARR and that also that's a theme of sort of the exponential nature of the ARR of some of these new AI native companies. Would we agree that that's the defensible metric you're looking for now, or what kind of metrics are you looking for? I'll start with you, Zach.
I mean, I think the thing to remember is that the internet is the most efficient distribution machine ever invented. So if you build something that is truly new and differentiated and that people want, everyone in the world will know about it tomorrow, because it will be across every feed and in every group chat and in everyone's inbox, and they will try it immediately. And AI has a huge delta over what was a relatively static sort of technology landscape for the last 20 years. We've been building sort of like workflows and little text boxes that you put in letters in and then save them to a database and then repeat it. We've been building that, and then websites were as exciting when they moved with Ajax. I mean, it was like not a lot of change for 20 years, and now all of a sudden we have something that's equivalent to magic again, and people are excited, and the adoption rates are showing up as a result. So like a number of my companies have gone from 0 to 10 million in revenue in the matter of months. Now, the question you asked is like, is that durable? Is it sustainable? Is that something that we look at to invest against? And the real answer is no one fucking knows. Like, I don't know. But the distribution is there, and the users are showing up and they're using it, and the magic is magic.
Zoe, would you go?
Well, maybe I'll take the other side. So we've been investing a lot outside of software. So hardware businesses just have kind of a different problem and challenge to solve in terms of making it very clear to an investor what does good look like. And it's really incumbent on the founder to be able to brilliantly storytell what it looks like from where they were to where they are today, and what a good Series A looks like and Series B and beyond, because they might be the first in their category to have ever built something like this. And so it's a different motion. You can't just look at kind of pure revenue, pure growth. It's understanding kind of, what does the future look like for the capital stack moving forward, and educating those investors on what you are going to do.
And another big trend everyone talks about is agentic. And I noticed, Enrico, Legstar, you invested in an agentic AI company, Ravical, which is bringing AI agents to professional services firms. I was thinking, why don't you just try and kill the professional services firms? But I guess they needed some AI agents as well.
I'm not going to say that on stage.
No, sure not.
Look,
I'm sure, but you'll suck all the data out of the services, and then you'll kill them.
No, actually, in fact, the insight there is a little bit of a different one. So in professional, you need somebody to take liability, right? That's what the service in the end is really bought for. If you take, KPMG, EY, or any smaller firm, one of the reasons that you give them the job is not just because they can do it, is also because they put a signature in the end under it. And I think we're a long shot away from, tech companies assuming that responsibility. But what we can do is we can help these firms provide a service that is, kind of future-proof, because I think let's bill as many hours as possible and then just, alert out a standard outcome that is, the end of year report or whatever it is. I think that time is now rapidly nearing its end. So any, agentic is not so much the question here. I think the idea that we have is more AI plus the human in the loop. How well can we bake that into processes and leverage data sources that nobody else has access to, which is all the entity information, the legal stuff that is buried in the advisory firms.
Exactly. Who I gather who are no longer hiring. I noticed a lot of these business consultancies they're flat on the hirings. It's such a strange phenomenon. Now, one thing that doesn't change in startups is human beings. And especially at the early stage, we're all aware of how things like the founders themselves behave, carry themselves, pitch, storytell, all of those kinds of things. And, there's no getting away from it. Everybody is interested in that kind of, there are even like psychological profiles done of founders sometimes prior to investment. What for each of you, what are the kinds of things that you're looking for that might go, wait a minute, I'm not sure we're going to do this. The soft red flags that might be team dynamics or, the natures of the founder behave. Zach, what do you think?
Yeah. So honestly, it all for me comes down to truth. The founder's job is to be a truth, and they're out in market, gathering information, getting feedback, talking to people, and trying to figure out what customers really want and what really can be built. But when they go into the pitch, they're telling a story, a narrative of the future, and it's very easy to shift from a narrative to starting to be a little bit hyperbolic to starting to be a little bit untruthful. And so I spend a lot of my time when I'm talking to founders just figuring out, are they grounded in the truth or are they living in a fantasy? And that's, it's always the hardest thing to figure out.
Yes, we've seen some casualties in that space from things like Forbes 30 under 30, who attended to gild the lily a little bit too much, unfortunately. What about you, Enrico?
So, kind of in line with what Zach is saying, I tend to look for what founders do and not what they say. As in, I try to spend as much time as possible with them in the office. I try to spend as much time as possible near the office, talking to people who work for them, maybe who work in the team, who used to work for them. I think nothing unmasks, narrative and all that as much as, well, do you show up at 10:30, waltzing in all relaxed, or are you there at 7 a.m. manically grinding away at building this thing? How long do you stay? Are you there on the weekends?
Do you do like surprise visits?
I've like
That's wild.
Mystery shopping.
whatever, my way to work can be creatively interpreted as, where
Hi, just thought I'd stop in for a coffee.
the guy with the newspaper
You think that
who holds it.
is that a cultural thing in the US or not? I don't.
No, I haven't shown up to anyone's office unannounced to see if they're working.
You sure?
What are your soft red flags?
I think lack of self-awareness is a big one. I think that, can be in terms of your understanding of your own strengths and how you need to surround yourself with a co-founder, kind of a founding team. And that can also be in terms of the market. I think more than ever, it's incumbent on the founder to understand the market that they're building within and to navigate to an outcome that is going to be kind of venture scale. And that also takes self-awareness today.
What about the kind of macro effects that factor into your thinking? Do you think about, like, is the stock market going to crash tomorrow, or the circular nature of AI investing between OpenAI, then NVIDIA into OpenAI, then OpenAI into NVIDIA? Are the beads of sweat breaking out on anyone's heads at the moment in terms of the potential bubble? Zach, you're nodding.
Yeah, I mean, our job is to understand what we think is going to happen in the future. And, if we're living in a crazy AI bubble where all the circular investing is made up bullshit like it was in the .com era, we should all just take a little break and wait till that sorts itself out. And our job is to underwrite that and to look at that and to think about that and to try our best to evaluate that. But, we invest on 10-year time horizons or longer. And so what the market is like today is so fundamentally different than what it will be like in 10 or 15 years that we really can't underwrite much into the future. And so a lot of it is literally about just trying to figure out, can this person do the impossible? And do I want to be part of that journey?
Yeah, so, I mean, obviously at a VC level, the stock market is only one factor. But it must have some effect on decision making.
Definitely. But I think maybe another lens that we've been thinking a little bit more about, especially because we have a lot of companies that are now selling into the government, into the U.S. federal government. Obviously, kind of geopolitical dynamics there also incentivize different pools of capital and non-dilutive pools of capital to exist for our companies. And so that oftentimes is kind of a new thing that we're looking at when we're evaluating a company that may be selling into the Department of Defense. What are the grants that are accessible for that type of business?
Yeah. And certainly sovereign AI, defense, any kind of sovereign technology, Europe is all over that right now as well, for obvious reasons. What sort of in the closing kind of minutes, I talked about the soft red flags and some of the macro effects. Is it still the case that founders can generate buzz on their own? Like, talk about the Silicon Valley days of we're entertaining multiple term sheets, or is there any way that say the entrepreneurs here can kind of make you really excited about their company or an investment?
Yeah, I think this is probably a universal truth that in a market of noise, you want to find the signal that stands out to the people who you want to signal to. That might change over time, right? Like whatever that is, might look very different. Now we're seeing a lot of, launch posts or whatever, people trying to create buzz with videos. Some of them, $50,000 euro budgets or more. Some of them AI generated. And
it was Cluely was the big one for that, wasn't it? And it had the kind of meta glasses, Yeah,
you can, some people all out there on social media, and you mentioned the lovable thing, the whole AIR quoting every 4.5 minutes, giving an update on where you stand in AIR traction. It's a signal, and over time, more people will jump on that signal, and then it gets overused, and it will also get misused to some degree. I think I lean heavily into social signal, as in, like, do I know the people who are already involved in this? Do I know the people who know the founder? And can I get a, hopefully unbiased statement from them and kind of read the market like that? I hope I don't respond so well to hype mechanics in the.
You run a LinkedIn post through an AI detector, perhaps.
Yeah.
Zoe, what do you think?
Yeah, I think in a world where it's very easy to build anything, it's cheap and everything kind of looks the same, having a brand, whether that be kind of the founder's own personal brand or is itself actually building a brand in their category, is in and of itself kind of a way to generate kind of alpha. So I think it's important. I think it's something that we see even at Initialized and kind of the brand of Initialized and why founders want to work with us. So it cascades all the way down.
Right, yeah. And so personal branding is a thing now in the entrepreneur world. Zach, you're still looking for your truth-seeking entrepreneur. But is there anything that they can do to make you really kind of, super excited about what, and maybe, elbow out other investors out of the way to get to them?
I mean, so it's all for me. It's all about the where we are in the market cycle. So for the last few years, we went through very much a place where investors were very skeptical and everyone sort of had taken their beatings from the 2022 and 2023 era and was a little bit sort of like on their heels. And then AI started to take off. I had a friend call me up the other day and he was like, hey, so I invested in my roommate's company in the seed round and it was Anthropic, and now that 100K is worth like $20 million. What should I do? And obviously I was like, sell. But it's like when those stories start to percolate across the ecosystem, when people start to see their friends get really rich, people start to froth, and that froth and that FOMO starts to just drive the entire ecosystem, and things just go faster and things get crazier, and investors move from skepticism, from fear to greed, and the whole world just gets wild. And it feels like we're still we got a ways to go further into the cycle when things are going to get crazier. So who the fuck knows?
Okay, exactly. Well, on that note, with the final 30 seconds, quick fire round, 2026. Continuing boom or bursting bubble? Yeah, which one do you pick?
Boom.
Continuing boom.
Boom.
Zoe?
Boom.
Boom.
Bursting bubble.
Bursting bubble. We have the controversial European on the panel.
That's always us, isn't it?
We're so down. No, why do you have to be the negative one?
Yeah.
Come on.
Can't end on that.
You can't end on that. Right. Anyway, well, we are ending on that. Ladies and gentlemen, give it up for Zach Coelius from Coelius Capital, Zoe Perret from Initialized, and Enrico from Lakestar.
And Mike. Thanks, Mike. You rock.
Oh, yes.
And for me, Fire Founders.